There's still these concerns of a looming recession in the U.S. You also see that Treasury yield curve deeply inverted.
The yield curve is still inverted, but actually it has flattened out quite a bit. So for example, the 530 curve right now is actually back in positive territory. And the 210s has gone from a negative 110 basis points to now maybe negative 60. So I think what the market is signaling is that they think that the Fed is likely going to do maybe one more rate hike and then one and done. And thereafter, they're actually currently pricing rate cuts as soon as the third quarter of this year. We think that might be too early. We think that there could be a pivot maybe towards the end of this year, but not maybe as soon as what the market is currently pricing at the moment.
Is a recession priced in?
Recession does not seem to be priced in when we look at risk assets.
Yeah.
So for example, if we look at high yield right now is still trading at about mid 400 basis points handle. And when it's pricing in a recession, is usually about 800. So we think that as a recession becomes a bit more apparent, that risk assets could start to price that in. Now, one of the drivers of the recession that we think is going to come is going to be credit conditions. Now, this is something that the Fed has not previously spoken about. So if we look at the minutes from the latest FOMC meeting, in the past they talk about financial conditions and whatnot. This time, for the first time, they're talking about a concept called credit conditions. The willingness of banks to lend, and that has deteriorated significantly, and that is going to do the job for the Fed of tightening credit conditions, financial conditions, and eventually lead to a recession.
Yeah, so if we're talking about like a bank like SMFG, one of the first major banks to start selling AT1 bonds again, I mean, is that just a sign that you think that people are not exactly backing away from this sort of asset class, but you're seeing beyond that, there's still some lingering concerns?
Yes, we think that the area of concern for us is really U.S. regional banks. And the reason is because over the last, call it 12 to 18 months, most of the bank lending that has occurred in America has come from U.S. regionals. And most of that lending has actually gone into commercial real estate. And as you know, U.S. regional banks tend to cover the suburban areas of America. And so this has gone to a lot of construction of suburban offices, which remain very vacant. The occupancy rate remains about maybe 50% pre-COVID. And so we think that in the coming year or two, there's going to be growing distress in this space, and that will also potentially amount to credit losses for those U.S. regional banks. And so we think the story in banking is not over yet.
Okay.